Hello, welcome to the stream today. Unfortunately, you've got me again for the whole session. So if you just bear with me, I will start putting the invites out on Discord. So just give me a minute, and then we'll get started. For the most part, we're just going to continue on from where we were on Thursday because I've made a few changes and we'll walk through them. But yeah, I think we may have something here that we can work on, and we can potentially get it into the charity Darwin. So what I'm going to do is I'm going to show you the changes, show you the test and the market that we're going to be doing it on, and then also we'll dig into Quant Analyzer. So just bear with me while I put the announcement out to everyone in the Discord, and then we'll get cracking. See if that works. Send now. Sent it the wrong way around, but it doesn't matter. It'll do. Right. Get this a bit down to the left. Let me see if I can put the chat on. So let's see. Show chat on stage. Let me have a quick look. Yeah, okay. New comments will appear here. Awesome. Awesome. Okay. Well, welcome to the stream, everyone. And we are just going to continue. If you were here last week, you knew that we built the it was the weekly open breakout strategy. And I've made a few changes. If on Thursday, Max joined into the stream and made a comment about trying to use percentage of price. So what I've done is I've gone ahead and actually built it. So then we can actually have a look to see how does the system perform when we add a percentage of price as the breakout level. And I can say it does make a little bit of a difference. When I say a little bit, a big difference actually. So we actually get really good returns for the strategy. We'll jump into it. So not too much has changed. It's still a very simple system. We've only got 12 conditions, and we've only built the sell side because obviously we're testing it on. We were testing it on the NASDAQ, and the NASDAQ was obviously long only sort of strategy. So yeah, once per bar on the daily, we are then. I've changed it from the open of last week to just the daily close. So yesterday's close. Ignore this because we've now got rid of this. So open range breakout is yesterday's close. So if I go to trading view, that's not how you spell trading view, but is what it is. And let me just get something up, for example. I don't want the offer. I'm okay. We look at the close. So yesterday's close was here. So that was here. And essentially what we're doing is we're adding a percentage of price. So it could be, 0.2%. It could be a lot more. Sorry, this is the 4 hour. That is not yesterday's. So yesterday's close was here, which was in fact, yeah. And then what we're doing is we're then using that as our point of initiation, and we're adding a space. So the space could be 0.2%, it could be 0.5%. We can use any sort of level to see how much of a space we want to add. So that's just the general idea. It's very simple. Point of initiation plus a space, that's our breakout level. It's as simple as that. And again, you can do this for anything. As I said, we could have used yesterday's high, we could have used yesterday's low, we could have used yesterday's open, or you can look at the weekly high and low. You can use anything as the area and anything as the space. So like from this, we can start generating so many ideas and so many different sort of strategies that we can build that we can just go through like different areas of interest. Another one you can do, obviously, is you could just simply do the moving average. You could add a space to the moving average. Prices below sort of like where the space area is. So, for example, if we just add a simple moving average, we can see here that that's the moving average. We could have said 1% below the moving average is our breakout to the short, and 1% is breakout to the above. And we could do this to any point of price, and obviously we can change the moving average to whatever period we want. So we can get loads of different areas of interest as well from that. But that's essentially the simplicity of this approach, and it does work. So if people are wondering like how to sort of build percentage of price space, obviously we've already kept the close condition in here as a variable. ORB, it was our open range breakout, which it's not now. It's yesterday's close range breakout, but it doesn't matter. And what we've done is we've got 3 formula blocks. Let me see if I can zoom out a little bit so I can get all the formula blocks here, just to give you a good understanding of how I've went about it. Okay, formulas is just like basic math, plus, minus, times, divide. So lots of different ways to go about it. But essentially what I've done is I've created the space constant here, and the space, we're just going to keep it as 1. So it means that we can change that. This is what we're going to use to optimize in MetaTrader. We don't need to do an optimization really, because I think I've already done it in terms of best sort of parameters or estimate that works. We've done an in-sample test, then we've done an out-of-sample test as well. So it worked pretty well. So we got our space, we divide it by 100. So 1 divided by 100, we use this as our 2 variable. We then do the variable 2 times the price of the close. So we're taking from the price of the close, and then we do that, the original close plus the difference that we've got here. And this is what creates 1% of where the close is. So we're adding 1% of price to the close. We can also do obviously we can change the space to 2. Now we're doing 2% of price, and 3 and 4 and so on. And obviously we can adjust this depending on the asset that we're trading. So like, let's say we're trading, like, obviously NASDAQ, it moves a lot more than what currencies move. So we'd probably have like a space of 1 or 2%, where, like, let's say we're trading something like EU, would maybe a space of 0.1% of price, because it moves less in a day. So again, we can adjust this and do optimizations for whatever asset it is. Although I don't believe it would work very well on something like euro dollar, because it's not the most trending sort of pair, it's not the most volatile pair to get breakouts on. There's a lot more fake outs than there's breakouts. So this might work quite well on dollar yen, for example, NASDAQ, and hopefully it will work well in S&P and other assets that have got like a long only bias, because that's exactly how we've built it at the moment, because the original idea was to build it on the NASDAQ, because just want to get a few more indices strategies out there. And going back to why we're doing long only is we know there is a statistical edge to the long side on indices. There's been the statistical edge has lasted over 100 years. So we know that going long has an edge. So we build a system to make sure that we're exploiting that to the best that we can. So yeah, this is simply the system. And again, all this is just a no position. We're doing the breakout of the B up. The B up was where we got the variable for the breakout zone here. And yeah, it's very, very simple system. It kind of looks more complex with variables, but once you understand how to use them, it becomes a lot more easier. And again, we're going to close at the end of the day. So what I did is I run the optimization. Sorry, this is on a different asset, because I'm now going through different assets to see what we get. But we did originally do it on NDX, NASDAQ, and I think I've done it to 2024, 01, and I've done it like 1, 0.5. Like 3. I don't know if it will automatically come up. No. Okay. We'll not run the optimization, because I want to kind of show you the result that we get from this, and we'll take it into Quant Analyzer and see if we can do any sort of, optimization for, maybe we look at resorting it to, we're only trading that specific time horizon. So maybe we look at sessions as such and take it from there. So I think what we do is 1 and 1. And we'll do risk of 1% as well, just for the sake of it. I don't normally risk 1%, but yeah. We'll get it to run until this point. So we'll do from 2019 to 2026 current day, and we'll run it. And basically what this is ignore the SM because we don't use that anymore. The risk is 1%. The stop loss, we're using 1 ATR of the 1 hour. The M is the multiplier of the ATR, which is just 1. So we're only using 1 times the 1 hour ATR. TP, we don't have one in yet. So, that's nothing to worry about because I left the TP open because we're closing at the end of the day. I want to see how much movement we can get in the system at the end of the day. And the space, again, that's just 1% of yesterday's closed price above. So, very simple system. And it's cool to see that these simple systems can work very well. And this is without doing any sort of crazy optimization. Like I didn't change like the 1 hour ATR. Like I just kept it as that, just for the base level, and then just done a optimization on the space. So I run it from 0.2 in steps of 0.2 all the way up to 3, and I found that 1 was pretty good area. It works pretty well each side of it. But obviously, the bigger the space, the less trades, and the lower the space, the more trades. And I felt like this was a decent sample size for the period of time. So hopefully it runs, and then we'll see what sort of result we get. I mean, it is a pretty good return on the whole system. Actually, what I'm going to do is I'm going to stop it quickly and put it to 100, just so that we can actually see in brown numbers rather than 40,000. Yeah, I think if I can find it back here, I can see we actually do get a decent sort of return, but maybe not. No, I don't think I'll be able to find it. But yeah, I found that this sort of simple system actually works on so far. I've got it working on 6 different assets, which is really good to see that it's not just specific to the NASDAQ. I'll let you guys, if you ever want to build this system, figure it out for yourselves in terms of what assets to trade. We're going to focus on NASDAQ today anyway. So yeah, we'll do this. We'll take it into Quant Analyzer, and then we'll take it further from there because I think I've run well too many tests to try and find it. Yeah, I have. I don't think I'm finding this one. But yeah, it's, as I say, it's a very simple system. Maybe we figure it out that maybe it works really well in the New York session. So then we're taking the first sort of burst momentum to the upside during New York. And then maybe we apply like a moving average or some sort of volatility metric to sort of filter out some of the more worse trading conditions. But then, again, these are all things that we can add and test. Yeah, maybe we want to only trade this around New York because there's loads more volatility there. So we'll see what we get. I've not actually looked at the Quant Analyzer results for this yet. I've not even saved the backtest file. So this will be quite, it's not as if I've obviously know what sort of result we get here, but I don't know what we get in Quant Analyzer because I've not loaded anything into it yet. So we'll do some analysis in Quant Analyzer. I also I don't know if it's very clear on the screen here. We see like a big spike in equity and it drops. It's actually a losing day. These are things that I would want to sort of maybe watch the tape back to see, is there anything that's obvious that we can then trail the stop loss? Because as I say, this is just complete open stop loss end of day, which I think, the trades that will be open in New York end of day is fine because we're not going to be in the trade for that long. Where like if we're in the trade from the start of the day, we could see massive swings in the equity that could have been avoided essentially. So yeah, I think we'll do some work to this, see what we can do, what we can find, if there's anything obvious that we can get rid of to make sure that we're creating the best possible strategy, but making also to make sure that it's as robust as possible as well. I don't want to do too much optimization. Like I'm quite happy just keeping the stop loss where it is. Hey Rob, how you doing? Yeah, I'm good, man. I'm good. How are you? But yeah, we'll see where we get with this. Like, it could be quite interesting to add a moving average to the daily time frame, because then we're only taking trades when we're in a clear uptrend. So, like, we're not getting involved in bear markets. But maybe it works. Maybe it works in 2023. Was it that we had our last bear market? Let me go back in the S&P. I don't normally take too much of a look. Yeah, January 2022. Sorry, 2022. I had that sort of bear market, and then 2023 was fine. Yeah. So yeah, let's go back. So yeah, interestingly enough, we can see that where the drawdown or the stagnation period actually happened was during that period of 2022. So yeah, maybe it would be worthwhile applying like a moving average so we're not getting caught up too much in it. And it could maybe remove some of this. Or we could then create the sell side as well. So then, when we're in that bear market below the moving average, we're then taking shorts. So then we're taking advantage of short selling. But yeah, these are all things that we can test, which is always a good thing. It's always good if you get something like this working. It's a very simple model. But yeah, we'll see. We'll see. So far, looking good. Got 1.5 more years, and then we'll take it to Quant Analyzer. If nobody knows what Quant Analyzer is, it's just simple analysis sort of software that we can then go through trade analysis. So we can look at P&L by hour, month, day, everything like that. So it's a really good tool, but also make sure that we don't do any over optimization as well. So we had that big drop off in 2024. Which doesn't make too much sense, to be honest. But yeah, that's trading. We've not done any optimization or added anything. What I'm probably thinking is maybe we use an ADX or an ATR comparison. So then, when the ADX is above, like the 15 period is above the 20 period, then we're taking buys. When it's below, then we're not taking any trades. So we can test loads of different things to sort of filter things out. But we don't want to get caught in over optimization. So, if it's really obvious that we're looking at a certain time horizon, maybe we don't add the ADX and we just go for that sort of session window. Obviously, we'll get to see how it goes. It's a little different, Rob. So, like, what I've done differently is we've done percentage of price. So what I'm doing is I'm calculating from the close 1% above or 2% above or 3% above as the breakout. So for example, hypothetically, let's say this is yesterday's close. We are then adding from this area, 1% of price or 2% of price as our breakout level to go along. We've not done the short side. We've only done long only at this moment because we're focusing on obviously NASDAQ. So yeah, not too bad return, not too bad profit factor, decent amount of trades, a little bit less than the obviously the win rate, but again, that's quite natural considering that we have we've not done any sort of trade management, and there's no static stop take profit, so it's just completely open. So I'm not too fussed about it. Yeah, it's not bad at the moment. It's quite good as a base point. Whether it's something that's crazy good, I don't know. Yeah, so not too bad. 377% with 20% drawdown. So the good thing that I like about this strategy already is the average return is higher than the drawdown, which is really good. It's what I like to see. Stagnation period is not too bad. And crazy enough, it's profitable every year, which is interesting, especially in 2022 when it was a down year. And in 2020, we had the COVID. So crazy good year as well. So it goes to show you that maybe when volatility seriously picks up, it does well. And 2025 was quite a bull market as well, so that's why I've got a good return there. But yeah, good start, good start. Um, okay, we can really see that there is a clear winner in the day. Like Monday, that's a crazy day. Um, but we can also see it is profitable here as well. I'd be interested to kind of cut it to, 16 is actually 2, because obviously GMT plus 2. So I'd maybe be looking at just trading this sort of window here. The 16 to 22, just to see how good that sort of area is. So 16 to 22. Which then we can see it's a lot more stable in terms of every year's results, I would maybe say, although it's down quite a bit this year. And I think it's not the worst monthly result at the moment. But yeah, interesting. Like we've actually got worse returns this year than what we did if we do it this way. Profit factor is already not bad as well. 1.41, just trading the New York session of this strategy is really good. Just trying to see where the stability is. So you'll see that some years actually are better and some years are worse. So last year's results cut by half just trading the New York session. The 2023 increases. So yeah, interesting. Stagnation period is double as well. So we can see that we've been in stagnation probably since here. Yeah. So we've not actually made new equity highs since this point, which is maybe a little more concerning because, everything up to this point has been really good. So maybe we are definitely seeing that there is some crazy volatility within the New York session at the moment, that it's struggling, which could be related to since Trump's been in power, that we're starting to see this shift here, or it could be anything. It could be anything. But what's good to see is if we just traded the normal way, we can see that it's profitable across the board, which is good to see. My only problem would be is maybe the liquidity isn't as good in the Asia session. So if we're pushing mass volume on this strategy, maybe it's not that great. Again, it's maybe something that we can try on the charity Darwin with this strategy. So, maybe we only trade Monday, Tuesday, Wednesday, and then we skip Thursday and Friday. I don't know. But Monday is looking crazy good. It's clear that Monday has a massive edge on this strategy. So maybe it's a Monday only strategy. I don't know. I'd need to do more into it. But yeah, Monday. Yeah, interesting. So very different distribution. That you get 3 years of crazy good results, and then you got 3 years of not terrible, but not great, and then you get 2025 like all second best year, and then again Mondays is what's killing this strategy this year. So again, I think this definitely goes to show that I don't normally like filtering a strategy out by singular days, because unless there's a statistical analysis around that as to why fundamentally, I wouldn't be the biggest fan of just saying, I'm only going to trade Mondays, because yes, it might be the most profitable day, but just because it's the most profitable day doesn't mean it's the best strategy, because we've now went from, yes, our profit factor is 1.85, which is really good. Win rate is really good as well. But the drawdown to returns is actually negative now, even though we've got less trades and the profit factor is increased. So sometimes, what I would say is, profit factor is not everything. Yes, it's good to have a decent profit factor, but trying to push the metrics just to make it look better in a profit factor, like saying, I've got a 2 profit factor strategy, when in fact that it creates more stagnation. It will probably create you more problems as well when you're live trading, because if you turn that strategy on, let's say you turn that, you're like, this strategy is great, you turn it on here, that's 3 to 4 years, 3.5 years of just nothing, and I can tell you that most people are not going to go through that. People might get like here, and switch off, and then it breaks all-time highs. So that's why, I think having distribution across every day, unless it's like so obvious that like every other day's red, maybe the edge is Monday, but yeah. See, Thursday, Friday, maybe get rid of. I don't know. Like, it's evident that September's struggling, but we need to see, is that just in 1 year? These are all things that are very important. You could get rid of September. Yes, you'll make the results look good, but is it logical? Probably not. Um, if we, for instance, like just get rid of September, it's gonna make the curve look perfect. But again, this is where we're getting into the curve fitting sort of narrative as well. We've now increased returns to 440. Getting rid of September, in fact, has massively boosted the statistics. But again, we just need to kind of look, is September every year red? 1, 2, 3, 4, 5. Okay, so for the past five years, it has been red. So maybe there is some statistical significance, or it's just pure randomness and sequence. This is, again, kind of up to you. If you have any sort of fundamental bias as to why it's maybe like that, it'd be interesting to find out. But I don't know of anything in September that would make it fundamentally be worse. If we do like different optimization and we test everything and we see September being bad, again, the problem is with the data that we've got on Darwinex, we've only got from 2019 that's actually half decent. So we got 1, 2, 3, 4, 5, 6, 7. This is our 8th year of this data. So maybe we go into strategy quant and have a look at see how September's performed. And we could probably build this in like Algo Wizard or something like that. Maybe that's what I do, just to kind of get more data on it. The problem is, how good is the data going to be? I don't know. I've not used strategy quant as much as others, and maybe something that I need to dive deeper in. Regards from Spain. Hello, welcome. So yeah, I'm not seeing anything that is like in the eye, like staring in the eye, that's terrible. I mean, that September is quite bad. Maybe you do turn it off. Maybe you do. But then again, if you start to see it doing better again, then maybe turn it on again. It's maybe one of those ones where you might not. Again, I think this is completely up to everyone. Maybe we get rid of September, right? And we apply this strategy on the charity Darwin, and it'd be interesting to back test it after September this year to see, was September profitable or was it negative? That could be quite interesting to see. Maybe that's what we do. Because it is clear that we have made the strategy better, but for the most part, I normally kind of stay clear of randomly optimizing. Like, how many trades do we have in September? Is it significant data? That is the interesting part. So let's only do. So yeah, we've only got 47 trades. Unfortunately for me, 47 trades is not a lot to say, yeah, we don't trade that month. But then again, it is pretty terrible results. But I think this again comes down to, this is why, what's your data source? This is just Darwinex data at the moment, just from MetaTrader. It's 98%. Like, I've got tick data from other sources as well, but we're just using it for the ease at the moment. So yeah, probably go back on strategy quant and maybe download the data that they've got, or the Dukas copied data. Maybe that's what we do. I've got QDM, so we can maybe get Dukas copied data, but I don't think it'll be too much better, because I don't think, from my understanding, that it was 24/5 markets pre-2017 for CFDs. We'd maybe need to try it on like futures or something like that of the rolling contract to see if it works. But yeah, that's something that we can dig into. But it'd be good to see this year, does this strategy perform in September? Maybe this is definitely something I'm probably going to keep an eye on. But anyway, it goes back to the question as well, like this looks terrible, but then because like I would never risk 1% on this strategy anyway. So my natural risk would come massively down because I would probably trade this at 0.05% risk. So then my drawdown is less than 1, and then my returns are slightly more than 1. That way we can manage everything accordingly. So if I was to not, let's say I was to trade September included, and September again is a bad month, I'm not going to lose 3%, 3%. I'm not going to lose all of this because, I'm not going to lose this much because of the risk is so like adjusted. So it might be 0.3% or 0.4%. So it's not going to harm me in the long run. And I think that's kind of just the way that I do it. Is it the best way? Maybe not. But it's been working for me ever since I've done it. So that's what I would do personally. But yeah, no, I don't think there's anything that we can clearly see here to say, let's get rid of it. Like Thursday is terrible, like it's down. But it'd be good to see how does Thursday perform every year. Is it just one time or is it lots of times? So again, like what we're seeing is Tuesday is terrible, but in that sort of first 3 hours, New York, it actually works. Um, which kind of makes sense. Like, as in, like that's where that's where it's liquid. It's the trading session starts in New York, so maybe that's what we do for that day. But I'm not gonna like this is something I would never just apply. Oh, we only trade New York session on Thursday. Oh, we only trade Asia session on a Monday. I just wouldn't personally be comfortable doing that because then that's where I think we're definitely getting down the over optimization. Maybe again, this is what I've made. I think I've made a suggestion to it. Like maybe we do Darwin that we test all these over optimizations and see. Okay, does this actually hold weight? Do we only trade Monday all the time, or do we get rid of Thursday? Yeah. So I'm building a Nasdaq strategy, and what I've done is it is taking yesterday's close and then we're adding a percentage of price. So what I mean is like if we go here, yesterday's close is here, we're adding say 1% or 2% or 3%, right? So and then that's our break. So let's say it's 2%. This is our breakout level. So we're waiting for price to sort of cross that level and then we're taking the buy. We've not done the sell side yet because we're just using the long only bias in Nasdaq at the moment. But we're going to try get something like this. Why is this not deleting? I don't know. We're going to get something like this on the charity Darwin, so it'll be quite cool. But yeah, at the moment, I don't see anything that stares me in the eye as to, like, let's say over this whole period of time, we've seen that Asia was terrible, New York was Asia was terrible, London was terrible, New York, it was only profitable New York. Then I would say, let's stick it to only New York, but then I wouldn't get rid of any of the singular days. So yeah, because I believe like these can change. Like as we did look at Thursday, right? Thursday, yeah, it's a bit choppy, but most of the losses, like it did make equity highs here, and all the losses come here. So it shows you that the single day isn't. See if the single day was straight to the downside, no winning years. If it was all losing years, then maybe I'd be like, yeah, maybe we do get rid of it. But it does have some winning years in here, so it's more 50-50. But yeah, I wouldn't personally remove it on 139 trades. If we do have more data on it, it's more significant. Or if there is an article that says back to the 90s that we have statistical analysis that says don't trade Thursdays because of this, this, and this, and every year's been read, then I'd maybe say, okay, maybe it does hold weight. But I don't know of any analysis on this at the moment. So we're just going to keep it as is because I'm still quite happy with the overall result. Even September is terrible, like I'm still quite happy with the 19% drawdown to the 21% return a year, which is better than the S&P from a drawdown perspective, but also a returns perspective. So that's always a positive when we've not actually done anything. So yeah, good start. So maybe what we're going to do today is let's see if we apply a moving average, and we could do something like something basic, something like I don't want to over optimize the sort of condition as such. I just want to put something that's quite basic. So we'll do the candle close of 1. Why is my number lock's not working now? Okay. I think my keyboard has died. So we'll do it old-fashioned way, because I don't have my charge right here with me. I need to jump inside. So we'll just do the old tap and scroll. Okay. Do daily as well. So hopefully this will update. So candle close above the 200 moving average. So if it updates, yeah. Exponential. It doesn't really matter what one we do. So we're just going to add a simple one. And what I've done here is if it's not above, then we'll just reset the value anyway. So we're only taking if we are above the 200. Okay, I know what I need to do. I'll need to just keep downloading the same file. Apologies. I didn't look at the charge on my keyboard before I came out. So it's now just going to say different versions of it. But it'd be interesting to see. So what we want to see is better sort of stagnation peak, less days in stagnation. Hopefully you'll see a drop off in trades by maybe about 200 maybe. And we want the returns to stay the same with less trades and the same amount of drawdown or less drawdown. Anything like that's good. So keep everything the same. Yeah, sometimes it's just simple, like everyone knows what a 200 moving average is. We're not optimizing it as like a 21 or a 57 or a 122. That's nobody's looking at those sort of things. Whether it's I've never optimized a moving average to like a weird number. What I view as a weird number as such, like 20, 50, 100, 200. They're typical ones that I'll look at, unless it's being used in like what's the alligator 921 and something else, and then MACD's got its own like metrics as well. But I don't normally touch like optimization for like moving averages. I normally keep it to whole numbers that we're used to as traders. So just see what sort of result we get. Might get worse, might get better. We'll see. I mean, because we're applying a moving average, my guess is we're probably going to get less return. But we'll see. We'll see. Again, what I want to do is maybe see if we can. Sometimes it might just be a case of just applying some good risk management. We've got an open TP here. Just close at end of day. We've not, as I said, restricted ourselves to this sort of sessions. So maybe just some good risk management is what's needed here. But we can already see that we're getting a lot less trades, where I think we are anyway. I know what I've done. This is a ×2 multiplier here. Maybe I do need to get a charger for my keyboard just quickly. Right, I'm just gonna run and get my charger. I'll remove myself from the screen, but I'll keep this back test running in the background. So just be a couple of minutes. Okay, apologies. I just need to go get my charger for the keyboard just so we can make some changes. So hopefully now. Oh. Yeah. Yeah, I can make changes now. Awesome. Okay. Where are we at? Where are we at with this? Have we moved? 2022? I thought it'd be done by now. Generally, I thought it'd be done by now. Let me see if we froze. I hope not. I think we have. Or maybe we haven't. No, actually, I don't think we did because obviously we're at that period where we'll be in the bear market. But I want to do like for like because the same settings I want to do. So 1 times the 1 hour ATR. What slippage and commissions did you include? So the slippage and commissions are just like whatever emulated. Like commissions is just whatever Darwinex commissions are per trade, automatically inputted. Slippage, it'll just be included anyway from what we do. But again, like I'd always say, like you can't really replicate 100% what slippage you're going to get in certain markets. That's why I just want to trade around sort of liquid areas or liquid markets. But also what I want to do as well is I normally use spread filters. So then where like, let's say spread spike, I'm not getting involved in a trade. And what we do is I take the average spread because obviously spreads can change quite a lot. We do the average spread when it's below a certain average of spread. That's when I'll take trades in the live markets. So I never really need to worry too much about spreads because I don't use pending orders or anything like that. Everything's into an execution. Kendrick, how you doing? Yeah, everything's good here. How about you? Regards from Congo, Kishna. How are we doing? Welcome. Thanks for joining us for the stream today. But yeah, there's always commissions in every sort of system that I build on here. Like we're not trying to hide behind a system that's got 0 commissions because that's just not realistic to what's actually going to happen. Because there's so many systems you can build that, like, if you remove commissions, it's profitable. So you add commissions, it's terrible. I thought you were happy sharing these because, not gonna lie, they're easy to copy. Yeah, I'm happy to share these ones. Like again, like this system is very simple. Anyone could build it. What I will do is like there's certain things I do not show because there's a lot of sort of things that I've learned over the years that then I can apply to these simple systems that give it a little bit more sort of robustness checks. Again, I think it all comes down to how you do robustness and how you actually react to them in live markets. Now, what I mean by that is looking at the data year on year. Like you could set and forget this, but if you're not like looking at it like from a metrics point of view month on month, might seem a bit excessive, but I always like to make sure that I'm looking at the data because the data is what we're trading. So if the data is still working, there's loads of different things that I add to these things that might have like a trailing stop loss or a trailing high watermark or things like that to make sure that we're actually doing good. When downloading data from Duscopy in order to build custom symbols, does that? Yeah, I mean, like if you like every broker's data is going to be different, right? I'm just using the Darwinex data that I've got because I'm trading on Darwinex, so it's going to be as close as I can to possible. Where if you use Duscopy data, obviously that's going to be slightly different. But there is a big positive to having 2 sets of data sets. A positive for 2 sets of having 2 different data sets, and that is if you can get it to work on Darwinex data, then you apply it to another data set, and you get also pretty good results. There's maybe a high chance that you'll apply it to another sort of broker's price feeds, and you'll still get positive results as well. Because you'll find that a lot of different brokers have different feeds, meaning you're getting in at different prices. So That's why I tend to kind of keep it the higher time frame things, as well as looking at like having a quite a decent size stop loss. So then, like, I'm probably getting as close to each broker's results or as close as possible. Um, I do have like a VPS in my VPS. I do have a trade copier that, but if I've got other accounts or other brokerage accounts, I'll copy it from the Darwinex account. So then we're always getting in at the same price point at every time, and we're always exiting at the same time my Darwinex account is exiting positions as well. So there's ways to get around it. That's just the way that I go about it. But yeah, you could have a little bit different in price action with different brokers. 100%. Sorry, apologies about that. Just need to quickly do something. You've not lost me. I just had to remove the screen because I need to shut a door. Okay, how are we looking? So what result did we get beforehand? 377% return with a 20% drawdown. Looks like we might get something similar, which is cool to see, with a lot less trades. 2019 to current day. That's the data length for this backtest. So almost 8 years. That is looking horrible. It is dying a little. But that's just what can happen with some systems, though. It's part of trading. It is part of trading, I'm afraid. It's one of the reasons that like I risk quite low risk in a lot of systems because yeah, you can see that we have got to this point, and you're like, it's going to continue on, but we don't know when the sequences of losses are going to come. Like, it's clear that they all come at one time here. But what's good to see is we have recovered out of that drawdown as well, which is good. But I feel like now the drawdown is probably going to be much bigger. But yeah, again, maybe we can see that, okay, when we apply the moving average, maybe Asia session's not as good. Then maybe we do just apply the moving average with the session. We'll see where we get to. What's good is again, around that 2022, we've actually ironed out a lot of the trades based on the fact that this is a breakout strategy to the upside. We don't want to be in a long when we're. Can I share the file? Yeah. I'll put it in the Discord right now. Actually, let me just log in and share it now. 2 seconds. I'm just going to go into my other screen. Upload. Okay. Okay, so for anyone that wants like this strategy or system, they can take it from the Discord, and you can apply whatever methodology that you want from it. At least we've got a good base level. So Rob, these are the settings. Like ignore. All we're using is this space, this multiplier, and this stop loss at the moment. So yeah, you can take the space, optimize the space, look for a robustness area, because that's the key thing. 1 hour ATR, we could move it to 2. We'll get a lot less returns, but then maybe it'll smooth out this area. So again, this is where this is what I would do with certain systems. This is let's say this is the system we're taking live, okay? I will split this up into different stop losses if they're pretty good. Let's say 2 hour ATR times 2 stop loss smooths this out. And it's still showing good graph, then I would split the orders. So then we've got different stop losses being taken as well. So we're not saying we're specifying it to this 1 hour ATR when, it means that if we can smooth out, the Sharpe ratio for me is what I want. I'd rather have a higher Sharpe ratio to smooth things out. So I would split the orders and split the strategy into a couple of different areas. So then we're not just hoping that this strategy is going to continue. We could then have for example, I don't know if it'll work, to be honest, but maybe this gives a good result as well. Notice you adjust the start and end other day, but I'm also unable to do that. Notice that you adjusted the start and end other day. What do you mean the start and end the other day? As in from here? Yeah, what we're going to see when we increase the ATR, right? We're going to see less returns in the days that are bigger, but also probably a bit smaller losing days, or it could be bigger losing days as well. Because we're only getting caught out at the 1 hour ATR, where the 2 hours can be a little bit bigger. Okay, this is locked me out. Yeah, the values. So this value wasn't here the other day, and this variable and this variable wasn't there the other day. These have just been added today, and it's if you download the file, you'll see it's because of the formulas. Okay, so the formula is the space, which is the constant that I've made today. So the constant is currently 1, and that's just going to replicate 1 area price. So then we do 1 divided by 100 times the open range on a MetaTrader. Yeah, these were here the other day, apart from the space. These are the constants here. Everything that's in here for your inputs will be on your MetaTrader and inputs here. Yeah, the variables, everything apart from these two were there the other day as well. So this, and this were all there the other day because we're all trying different things. Originally, we were going both long and short and using the stretches and ATR. But yeah, I can't find robust area, stable parameter area easily when I have 2 inputs max. But once I have more, I can't find robust area, stable parameters easily when I have 2 inputs. Yeah, I mean, the way that I go about it, right, is I build the entry first. Like, this system was always going to have a chance of winning because we're using the long only bias of the stock market essentially. So your edge is the long only bias in this case. So we don't want to have too many like inputs. But I think the problem is like it is hard to get systems that are robust. Like that's true. It is hard to get systems that are robust. Like I go through probably about 100 strategies before I get one that I'm happy with that's robust. The only things that like I optimize are stop loss and take profit for the most part. Entry. I don't optimize the entry. Like, don't get me wrong. Like the space can be optimized, but the space is consistent. Like it's consistently 1% above the close. So yeah, like let me see how I can do it. Rob, I'll read the message after the stream. I mean, I'm not going to go too much longer, but because I want to now, what I kind of want to do with this now is sort of do a bit more optimization on my own end. And then what I'll do is I'll share, I do think this one will be on the strategy Darwin. I'll share the exact sort of results that I get. But I will be applying quite a lot of different things. Like what the best way that I approach it when it comes to filtration is like you build a sort of filters package. Now what I mean by that is like you've got about 30 different filters that you would normally use, apply them one by one, see what works. But yeah, I would say easily when I'm trying to give a good answer to this while thinking this comment here. So just give me a second while I think of how best to give an answer because I need to think about how I'm going to say it. Like, I'm not just going to make something up on the spot. When I do an optimization, I'll just do, for instance, we're doing the space and we're doing the multiples of the ATR, so I keep the ATR the same. Like what I'm looking for is left and right. I probably need to get a strategy up that is robust to show you and explain what I mean. Let me think. Normally the way that I do it is I do an optimization over like 3 or 4 years, and then I roll it forward every 2 years. So like, we're always kind of keeping in sort of flow to the past most current data. That's just the personal approach that I've always had with it. So what I mean is, if I'm looking at trade in 2026, all I'm looking back to is we'll do 2024. 2020. So I'm looking at that period, then I run it for the next 2 years, if that makes sense. Sorry. So like I'm not really too like everyone has their own way of going about it. I'm not really interested in what happened more than 5-6 years ago. Because I think my opinion is markets do evolve, markets do change, so we want to kind of stay relevant in my eyes. Like that's the way that I see it. Now everyone else does it different ways. Like everyone might do, okay, I'm doing optimization from 2003 to 2009, run it out of sample, then an optimization, then out of sample. Robustness. True edge is very hard to spot. Yeah, it is. It is. I will agree with that. But I think like always revert back to like this is why I trade like lots of different systems, because if you rely on one system, like as we've seen there, like we've seen a drop off for a whole year. You could go from that 5 years of pure profitability if you're only trading that one system, great returns, hit 1 year slump, and then be like, oh okay, like I'm going to struggle, I'm going to give up, or I need to change something. But then we do see the edge continues after that anyway. But this is why like it's good to have, say, 20, 30 different systems at low risk, because then you're allowing yourself to have the best possible chance for all the edges to play out and play a real numbers game rather than true luck. Yeah, market regimes do change, and you can get lucky. The whole point is to try and stay relevant to what's kind of happening. It's hard. It's easier said than done because right now we're seeing like totally different markets to what we've seen last year. Things are going up and down the day. Like for instance, we're seeing big movements here. I don't know if there's any news, but yeah, we're seeing gold up and silver down at the moment. Stock market looks like it was going down and making a tiny bit of recovery. I don't know, but yeah, true edge is hard to spot. One of the ways that I look for robustness as well is, I think Martin touched on it in his live stream, is have it not working just on one asset. If we change this to dollar yen, naturally we're going to push down the space because 1% price quite a lot. So we can go to like, I don't know, 0.5%. And let's go back to our usual sort of stop loss risk. If this works on another market, like all I've changed really is a few conditions here, but that's just to kind of go with what the volatility of that market is. Then I would say that the strategy holds a bit more weight because it works in different markets. But I wouldn't like hold on to it that it needs to work across like very different markets. I don't mind if it works on a couple of different markets. It's good if it can work on lots of different markets, but I don't really. It doesn't need to for me. I have strategies that are very specific for certain markets, and I'm happy with that. I'm happy with the way it trades. But I've also got strategies that. There's the one that I've not all developed. Works on 10 different markets from a breakout strategy perspective, which is pretty cool. I forget, this has got the old moving average filter on it. And currencies are don't move the same as indices, so I wouldn't probably apply like a 200 moving average to this. Might work. Might work. Yeah, I think it's a good sign that we've just applied like a pure randomness 0.5. Have you tried any statistical arbitrage strategies? No, I have not. No, I have not. Have you? I might need to have a look into them just to see if I can build anything. But I've never really looked into statistical arbitrage strategies. Do you have any recommended resources to look at for statistical arbitrage strategies? Maybe I can have a look at it and then in a future stream, months down the line, because obviously I wouldn't want to I'd want to spend some time on it. Apologies if you hear too much noise. There's a bit of gardening going on in the background at the moment. That's why I have to shut the door, but I can't filter out everything. Yeah, maybe there is something here in dollar yen as well. But yeah, when I first jumped into the stream, you've probably seen that I was doing some optimization. This was me trying this strategy on a couple of assets that I was just going through the list from bottom to top. Okay, I'll have a quick look at it. If anyone wants to know, I've just highlighted the comment onto the screen if anyone wants a source. So thank you very much for sharing. I'm going to add it into my phone sort of bookmarks so I can have a quick look into it after the stream. So it could be quite interesting. Okay, Corpedia, 55 months basis. Okay, cool. Probably have a read over that tonight before the Champions League. Okay, so it showed us that it works on dollar yen as well, which is good because then we can apply some basic optimization to make it work. Yes, again, like 50% return, 11% drawdown, nothing crazy good. But recovery factor good, profit factor 1.35. Again, like this is something that this shows you that you could apply both of these strategies, right? And what we can see is maybe they might be slightly correlated here. But again, two different markets, you could lower the risk, and between the two, you've actually started building on a portfolio based on something very simple that we've built, or well, to build all of it here today, but just the idea today that we've had. So yeah, I mean, this is sort of what this is quite healthy. Do you purely create systems for certain market regimes conditions which help diversify your current portfolio? Yeah, slightly. I'm trying to do better at it because I do have a bias for certain markets, but they have a fundamental backing behind it, if that makes sense. But yeah, I think, how can I best describe this? I'm wanting to add indices in to further help with diversification. I'm wanting to add in some sort of mean reversion to help my diversification. But the way that I've found that's helped my diversification so far from the years that I've been trading is I do have different strategies on different time frames on the same asset. So what happens in the next 2 hours, I might have a strategy that only trades over the next couple of hours, and I might have a strategy that trades over the next couple of days. So what I'm doing is I'm catching both short, medium, and long term, and I feel like that's a good way to sort of diversify for certain assets. I do that for dollar yen, gold, pound yen, euro dollar, pound dollar, for example. What I try and do is I try and keep to the more liquid assets as well, just from a pure capacity standpoint, and also a liquidity standpoint, because as my trading scales and as more capital comes in, I don't want to be hit with limitations because I'm trading illiquid markets at illiquid times. So that's why I'm very for what I was saying on the stream earlier was looking around New York session, because that's where most of the liquidity is going to be for that asset. It doesn't mean that I don't need to trade during Asia or something like that. But I just know that as I scale with size, maybe problems like that come down the line. But yeah, I mean, how do you do it? So I have a certain strategy on gold that's not traded for the past 2 years because we've been in such a volatile market. When the volatility drops, then that system will trade a lot more. So I do, and again, it's quite weird. You can make a breakout system into technical mean reversion in a way, or low volatility that you just hold longer with bigger swings. So yeah, I think there's loads of different ways to sort of kind of diversify for different market regimes. Volatility it's an easy one. Above ADX 25, we know we're quite, we should be technically, according to the indicator, a little bit more volatile. Things are moving a bit more. But sometimes, it's good to have a system that trades in the less volatile times as well. So I do have systems like that. It's just, yeah, it's I don't have a best practice method to go about it. It's just pure discovery of building so many strategies. One of my best breakout strategies that I've built is on Australian dollar against the US dollar, which kind of baffled me a bit, but it's good. It works, and it only works when volatility is like low. It's weird. It's like it's waiting for volatility to really die off in anticipation of the next big burst, because indicators do lag. So I find that if we're volatility is going lower and lower and lower in certain markets, then there is going to be a breakout coming at some point on some of these like less volatile assets. And when it gets really low and it's not moving too much at all, then that's when I'm trading some of it. But again, there's a strategy on euro dollar that I'm trading that's only trading when volatility is high, and there's another one that trades when volatility is low. I think you just got to create the mixture, and that kind of creates a bit more diversification in itself, I believe. But yeah, I think trade a couple more assets. The problem you always have, and this is what I'm trying to do a bit more research into right now, is correlation is at its highest when there's news. Avoid trying to find the perfect methodology. It doesn't exist. Move on and learn doing real research and back testing. You can improve your methodology on the fly. Yeah, I agree. I mean, like all I do is just R&D, research development. If it aligns and it works well, I'll apply it if the correlation's good. Again, I think when you get to the point where you've got loads of different strategies, you need to think about, where does it best fit? Because you could get 100 strategies, but it probably doesn't make sense to apply 100 strategies if they're all triggering at the same time or around about the same time. Because then, all it takes is like one bad sort of day. Yes, your max drawdown on the back test might be like 5-6%, but again, sequences and things like that, it could all, you could be triggered all at the same time, and your exposure is 0.1% per trade, but 60 trades have been taken. So, you do the math, and you've got a lot of exposure on the table. So, yeah. I think like it's. Do you know what? There's so many ideas. Like honestly, just sounds quite bad, but like just go to Gemini or something like that and just tell it to give you a new idea every day. Build it, test it, and that's a simple way. Like rather than having to find research papers, or what you can do is feed it a book and say, based on the way that this person built strategies, build me 100 more, or give me 100 more ideas. And you can just take. Honestly, like I've not even tipped like the tip of the iceberg, like on how many strategies that can be made, or like again, you've got strategy quant that you can build strategies as well. Although I'm quite reluctant to use it as much because I need to, but I kind of like having the input that I have. I tried trading CFDs, tried a lot of strategies, ICT, pure PA, name it all. I couldn't find an edge and took pause on trading after 3 years. Yeah, I mean, not to call out anyone on YouTube or anything like that, but most of the stuff that you see, a lot of it is pretty awful when you start building these strategies from an algorithmic standpoint. Like, I think there's only one strategy that I've ever built that's been profitable every year. But then I build simple systems. So, I've never found one that's like, whoa, it's just turn it on, set and forget. Like, this is why I'm so like big on building portfolios and things like that, because all the edges can present themselves at different times. No one strategy. Well, there might be. I always say there could be. You never know. There might be a holy grail out there. I don't believe there is, but maybe someone that we don't know of has it. You just don't know. But from my experience, like I've not had a strategy apart from one that's worked every year since I've went live with it. So yeah, you're gonna have like I think this is like when I done manual trading, even when I done manual trading, I still traded 3 different strategies to give me that diversification because I knew, like, looking at Monte Carlo analysis, that even like with a 40% win rate, at some point one of the strategies was going to go into a drawdown. And because of how infrequent I traded, I knew it could last over a year. So what I wanted to do is build a different strategy that was different sort of methodology that hopefully, like, there is no guarantee that they're both gonna work at different times. But it gives you more statistical analysis edge. That the more there's more diversification, more strategies. They all work at different sort of times. Yada yada yada. It works for the most part, but there always be points where they all like are slightly correlated, and they'll all go and draw down at the same time. That's just part of trading and inevitable. But what I try and do is trying to keep like stagnation periods to like less than half a year, because if I keep it to like half a year, it means that I can go through a stagnation and still recover twice within the year. If that makes well, not twice, but I can recover by the end of the year. And then again, yeah, I think that it's now getting late for me. So I'm trying to think about the math, but yeah, I try and keep stagnation period to like less than half a year overall my builds. Can you kind of suggest a better prompt to find strategy ideas, especially mechanical ones? I was frustrated. Even AI was suggesting some of those ICT, YouTube, or strategies. Unfortunately, it's always going to suggest some of these things. Open range breakout can work, but not in the way that they're showing it. Like the system that we built today was an open range breakout. Well, yesterday's close technically, plus a space. So again, not similar. It's slightly different, but let me try and think. Like, where can you get a better prompt? I don't really give them. I don't have a lot of things that I give it prompts because I'm always just kind of creating something, if that makes sense, just by looking at the charts. I'm like, oh, okay, that's different from what I've built. Like, people say indicators don't work, but there are some indicators that work as well. So you can obviously use any sort of thing. You can assign to AI and quant researcher of hedge fund role. In that way, it will output less retail shit. Yeah. I mean, how much can I say? Yeah. Trying to think of a best way approach. I don't think there is a best way approach. What I've been doing is like using Claude for quite a bit, but I've been making it learn what I don't like and what I do like, and then I've been inputting strategies that I'm building and saying, okay, based on this idea, give me 40 other strategies that align with this sort of methodology in terms of the build. So like area of interest, space, breakout. And then it gave me like 45 different strategies to build. So from there, I've got 45. And then I'll do the exact same, but for mean reversion in different areas as well. So then gives you another 45 to build. And before you know it, you've got heaps. So you could go to like a website like Oxford Strategy, input that strategy into like Claude, make it learn it, and say, okay, let's build something else similar to this. And it might give you some ideas. Like it takes a while to get like an AI agent to sort of like learn what you're after, but once you get there, it can be quite useful for generating so much. But yeah. Anyway, I think I've just been yadding on there for a little bit, but one thing I will say, trading's hard. That's why quite a lot of people lose. There's no like quick way to going about finding it. So yeah, the most important for me is stagnation drawdown, average drawdown after near to highs around 11 hour, and the longest stagnation 81 days. Yeah, 81 days is fine. Like, it's healthy. Like, I don't have a problem with 81 days. I think I'm in a decent stagnation period at the moment, but I'm like a couple of like 0.3, 0.4% away from all-time highs. So I'm not too bothered, to be honest. Thank you. However, I live in Africa and my trading opportunities are limited to challenge prop firms for capital scales. Seriously, I'm trying to see if these is a little issue. Yeah, I mean, it's hard and it takes time to build the skill. But yeah, Was the running test an optimization or back test? Oh, that was just a pure back test. I've not done an optimization on this at all. I just wanted to see like with random sort of like put in like 0.5% and just to see if just applying like some random conditions showed an edge. It's cool that it did. I'll go back and try it on different because I was working my way up from here to here. I got to here before the stream. Um, some interesting results, I would say. So again, everyone here has the strategy. If you're in the Discord, if you're not in the Discord, I recommend you join because every time that we're on a stream and someone wants the strategy, you can just drop a message and say, "Can I get the strategy?" and I'll drop it in. I mean, none of this is like advanced builds as such because that's not what I'm trying to do here. We're trying to build some simple stuff that anyone here could go back, take it away, and apply their own methodology and test to it. It's just this is like literally the base layer, and then you apply your own stuff to it. It's more to kind of give you a starter guide to take it to the next stage. Because I can tell you, like, I'll change a few things here and here to kind of take it to that next level. But not in a way that people would think I'm applying like 50, 100 different things. I'll apply some simple things to it that is not over optimizing it, and it's still got those robust sort of parameters. Like I'll not make it look like a perfect back test. Like for instance, here we could go don't trade February and September, and then like this is what you'll probably see. Like some people online, they'll share like a perfect back test, and you'll see like random things moved. And it's like, okay, why? It's just to purely make the back test look better. It's like to make it look as good as possible, which is one of the biggest problems. Like I could just move February, September, and now the system returns 450% with 40% return. And it already looks better. And then again, we could then go optimize that, get rid of this hour, get rid of that 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 hour, and that hour. And then again, we're making the strategy look 10 times better. But I can guarantee as soon as you turn it on, the results are not going to look as astronomical as what you've made them out to be, if that makes sense. What's the time? Hour and 23 minutes. Jeez, I didn't realize it was that long that I've been just yapping. Okay, I think I'm going to leave it there. Obviously, we got a good result on the NASDAQ, which is good. That was the aim. Obviously, I'm going to take it further and see what we get. Try props without very strict rules. Darwinex is a good point for starting. Most of the props you use very hard rules. Yeah. I would agree to that. And a lot of them will. I don't know how much I can say. We'll obviously try and make sure that you don't get paid out as well. They'll find like if you're building algorithms, it's harder to trade prop firms because they've got loads of news rules. And everything like that, so it makes it even harder because like you could think the news is at 2 and you've put like you've coded in that you've put news filter 5 minutes before 2 and 5 minutes after 2, but let's say they're late and put the news out, you can get caught out that way as well. So it's a lot harder to be consistent returns with prop firms if you've not got the necessary tools for this, like all these news rules and closing before end of day and things that they shouldn't have, in my opinion, because if you want good traders, just allow them to trade. I think it should just be a more case of looking at how much they're averagely risking more than looking at when they're trading. Yeah, I think, was this the one that we got working? Oh, no, we didn't do that one. It was like this. But yeah, we'll just run this test and then, well, it's the same test, but it's just for anyone that's not long joined or anything like that, what we've built in the stream today, what result we got, and to know that it's in the Discord for anyone to sort of take it. Now it doesn't want to test. Of course not. Of course not. Busy. Okay. Yeah, what I might do, like just to give a little insight into what I'll probably do with the system, is I'll probably look at looking at the ADX value. So I'll be like, okay, does it work when we're above a certain ADX or below a certain ADX? Then what I'll do is I'll probably see, okay, what happened. I'll not be applying everything to it. I'll apply different things to see how they work. I might compare to ATR values to see, like, essentially if we're seeing a burst in ATR value above like an older period, then maybe it's good to see volatility coming in. Maybe I don't do any of that and I just apply some strict trailing stop loss, or these are the sort of things that I'll be looking to implement and apply. To have a look. Have you shared the strategy idea in the beginning of this live, or is it? Isn't it? I kind of shared like how I built it, but you can get the file for FX Dreamer in the Discord. I put it. It's in the strategy development section, or is it strategy development? I think it's called that. Quick look. Strategy development. Yeah, it's in the strategy development Discord section of Darwinex Zero. So you can pick that up, download it, build however you want on FX Dreamer with it. Yeah, the one thing that I would say is just don't take it and apply it to the live market, because we've not done enough robustness checks to put it live. This is the final piece of the puzzle that I will be doing later on today or tomorrow, depending on how much time I have. And then we'll get this probably on the chart Darwin, because it looks like there's a decent edge to it. So it's looking good. Like that whole period there is just stunning. And then obviously it goes into a little bit more of a rougher period afterwards. That's trading. Like what it's showing is maybe strategy erosion. Maybe the strategy's edge is slowly eroding because algorithm's been a little bit more easier to make in the past 4 or 5 years. So maybe more people are trading this because it's quite simple. Who knows? But again, we're taking every single breakout, so it's past 1% return. So maybe that's where we need to optimize a lot more. Sorry. Yeah, there's so much things that you could apply. Like you could theoretically look, okay, we know long only is good. How often do we get a bullish day after a bearish day? Maybe that's when we look at taking the 1% breakout. Again, like just simple statistical edges like that can make it different than just taking every trade, if that makes sense. Like there's so many different things that you can apply. I'm trying to think, like you could do, if yesterday was a 5% gain day, or like a massive, yesterday's return was bigger than the average of the past 10 or something like that, then we don't take the breakout the next day because we don't expect momentum to continue. Like, I don't know, like this is just ideas that you can all build and test. So there's so many different, this is what I mean, like there's always ideas. Like sometimes it can just be simple ideas like that that work. Like, after 3 down days, what the odds of a bull day, or an up day? Maybe it's 70%. Okay, well, apply this strategy with knowing that you've got a long only bias and a 70% chance of it finishing bullish for the day. There's simple ideas that you can apply as a simple filter to sort of like take the strategy to the next level. Yes, it's going to get 10 times less trades if you're doing like 3 down days. But it's all simple ideas. Like the Monday looks really good returns, but struggled the past couple of days. Maybe look at, okay, if I don't know, last week finished bullish, then we're looking for buys on Monday. Or, it could be anything. Robust checks would be good to see on the stream. Yes, I agree. What I am actually doing is, if you remember, we had Martin on the stream not that long ago, and he's kindly gave me full access to his software. Obviously, he went over it in his stream, and I'm going to be really trying to dive deeper into using this on the stream as well to sort of go over, like looking at robust areas for certain things as well, because I feel like his software does do a great representation on that. So that's what hopefully we'll get for next Tuesday, because I'm really going to put some time into making sure that when I'm going over it in the stream, I'm doing it 100% correctly. And, I'm not actually, I'm giving you good information rather than just making it up or anything like that. So hopefully, I'll ping Martin a couple of messages as well to make sure that everything that I'm doing on that software is 100% correct. And it means that when we come onto the stream, we can then go through it and it looks really good. Blayn, now let's suppose you find a strategy. What's next on your workflow? I'm curious about your development methodology. Okay. When I find something like this is something that I'm interested in taking further right now. This is a really good sort of base point. Take away the 200 moving average at the moment, but before it was a really good base point. Again, what I'll be doing is how do I describe? I'll be looking at optimizing the space 100%. So then we're picking an area that, let's say we up the percentage by 0.1, 0.2% each way. The results are not massively different. And that's what I would do by looking at a robust area for the breakout. Then I'll be doing the exact same with a stop loss. So if we change a 1 hour ATR to 1.1, 1.2, 1.3, 1.4, 1.5, so 0.5 each side. Do we still get a similar sort of outcome? Yes, the results will be slightly different. But I want to see that it's not just a fluke for that one certain parameter or one certain setting. I want to see it work across a multitude sort of area. So that's where Martin's software will definitely come in clutch for that, because it will definitely show. And I like his what his software does really well. One of the things I do love about it is when we do the optimization, we can stick it in, it'll download it straight to his software, and then it'll flatten off, and we can really pinpoint where we think the most best settings robustness are for that sort of strategy. But yeah, most of my methodology is I have a basic set of filters that I have, and I'll go through, test them all, and then try and make sure that it's robust across those levels as well. But yeah, I'm just kind of looking for robust areas. If I can keep the strategy as simple as possible without changing too much, I always find that probably has the best sort of return whenever I'm have a strategy live. Obviously, the more you add to it, the more complex you add to it, the more sort of different outcome. The more you add, the more outcomes it creates, the more problems it can create. That's very true as well. So yeah, I'll just go through more looking at management styles more than anything, because I think once you've found the edge, you don't need to sort of over optimize it too much. Most of the good stuff comes in management, risk management, trade management, in my eyes. If you can manage a trade perfectly, that's probably the best thing that you can do. And there's loads of different ways for trade management. This closes at end of day. Maybe it isn't. Maybe it's 10 times better if we have an open, we don't close at the end of the day and we just have a really good trailing stop loss. What I'd look to do is split this in. Let's say we're risking 1% here. Let's split it into 0.33% risk per trade, and let's apply 3 different trade managements to it. So then we're you got one that's more aggressive, you got one that's a bit more loose, but then you could have one that's just closing at end of day. So therefore we're capturing different aspects, different randomness of price. We could just apply end of day close, but then the move keeps going for another 2-3 days, and the trade that we could have held, we're not in. So that's what I look at. How can we apply different methodologies to the singular strategy, but also kind of make sure that we're not relying on just one single setting, one output. I like to have different ones. It creates, let's say you're in a trade, the 1 hour stop loss gets stopped out, but then it continues on the move. That happens quite a lot. People are, market's rigged. Well, you could split that strategy and have a 2 hour stop loss, 2 hour ATR stop loss. You're still in the trade. Yes, you took the first loss in the first account, the first trade, but you're still in another 0.33% position that could go to 2 hour. And what you've done is you've made net 1 hour. So like these are all things that I look at, like how can we spread the strategy across different parameters to get the most from the move. So yeah, that's some things. They're a bit more advanced and they take way more time than building. Building's the quick and easy aspect. There's a lot more things that go into more trade management and portfolio management or analysis, which I would still say I'm still learning quite a lot about. Building aspects fine. Always build new ideas, find new ways where there's an edge, but it's more for me risk management and how you're constructing portfolios, daily volatility, correlation, things like that. Like once you get to the point where you've got loads of strategies, that becomes a bit more important than just keep building, if that makes sense. How much time have you been in trading? 2018? 2018? Yeah. Can't remember. It's that long ago. That's the problem. I don't really count years. Too long. Nah, it's not that long. 2018 to about 2020, end of 2022, or no, end of 2021. So I had 3 years of doing manual trading. And then since 2022, I've been doing algo trading. So yeah. So not actually that long, but because I've been building so much over the years, like it's more a case now focusing on portfolio management and making sure that strategies that I've built continue to work or cut them. I've seen quite a lot of changes to my portfolios. I've not changed too much in terms of strategies, but there has been changes to the portfolio over the past couple of years. It's more on management control rather than anything. I'm not like a very risky person, so I'm always like more low risk. I can do like high risk. I just prefer to do low risk because I can not need to worry about making changes drastically, and I can make calculated decisions that way. That's the best thing about low risk trading, I would say. And also, like obviously, the risk engine, all that can multiply you up, or I think that's the best way because there'll not be a year that wipes me out or anything like that because it's just the way that I've structured my trading. So drawdowns don't really. I've never been stressed in a drawdown, to be fair, over the past 4 years because drawdowns have been minimal. So yeah, it's all about portfolio construction and capital reservation for me. Get returns is just a bonus. If I can beat the S&P every year, that's the main thing. Anyway, I've been on the stream for probably longer than what I should have, so I'm going to call it a day there. So thank you very much for everyone joining the stream today. I hope it's brought some value. Obviously, I'd love to see if anyone can take the strategy further and develop it into something that could be better than what I do, because I always believe that someone will be able to, I might show you the strategy, but someone might be able to make it into an incredible strategy. That's what I'm kind of hoping for as well, because it'd be great to see someone take some of these strategies, develop them further, use them, and they're doing great. So yeah. Anyway, thank you very much for all your questions today. It's been a pleasure to have you, and hope you have a good night because I'll be watching the Champions League. Okay, see you there.